Like banking, which impacts most of us for managing our wealth, for managing our savings, insurance is also one of the subjects which impacts most of us. Although in countries like India, because the awareness about insurance is low, there are varying perceptions about the utility of insurance, variety or the types of insurance cover that is available. Today in Mahapatra's form, I will try to provide you some of the basic understanding, orientation about how insurance should be treated. I have my own views based on years of experience in the Indian BFSI sector as well as in the BFSI sector in UK and US. However, you are advised to have your own consultation before you work on my advice. Insurance is a mechanism in which you obtain protection for some of the emergencies, whether for yourself or for your loved ones. If it is for death, you are obtaining protection for your family, for your loved ones, then it is called life insurance. If you are protecting from unforeseen medical expenses, it is called medical insurance. Generally, life insurance is a separate subject, and medical insurance is covered along with other protections like property insurance and vehicle insurance. General insurance is the theme under which medical insurance is covered. First question that comes into mind is that who needs insurance? Most of the insurance was being taken by well-to-do people because A, they had an awareness, B, they thought that once they're not there, what will happen to their dear ones? But in reality, poorer people need more protection than the rich people because rich people have other sources for their family to fall back upon. How to calculate a cover? Cover is the protection that you are buying by paying a premium. We are looking at a particular incident happening. What is the amount that the beneficiary will get? Insurance works on the basis of an actuarial valuation on a particular class of people obtaining an insurance cover. Insurance companies calculate what is the probability of people making claims under those cover, and whatever is the expenses plus whatever is the profit margin and operational cost is loaded, and that is converted into a premium and is given to a whole group of people who are obtaining such cover. What is the cover that you should have? Typically, we calculate cover understanding how much the near and dear ones, in case of a life cover, will have to get in case there is the death of the person who is obtaining the cover. A cover for one's life when his income or her income was 20 lakh rupees per annum. The cover that is recommended for the full amount to be protected is about 2 crores because a 2 crore rupees for a 15 or 18-year period will provide an annuity of roughly around 20 lakh. In case of a health insurance, the cover calculation, of course, depends on various factors, which we will discuss a little later. It depends on the criticality of the disease, the propensity, the age at which one is obtaining insurance. In case of a life insurance cover, there are typically three types of policies. The first one is called a whole life policy, under which you keep on paying the premium, and when you die or when the death occurs for the person who is the premium payer, the amount of the policy is paid to the beneficiary of the policy, except in circumstances that if you survive till the age of 90 or 95, in some cases it is 100, that this benefit comes to you if you survive that period. The second is known as the endowment policy. Endowment policy is one of the most popular policies today because it is touted as one of the investment instruments under which it gains interest or it gains income from buying of units which are invested in the stock market along with life cover for some amount. It also provides either regular or a payback at the end of fixed period. One of the endowment policies is called a money back policy. The third policy is called a term life policy. which is the cheapest mode or the most efficient mode of obtaining life cover, because there it is only a risk protection. In my opinion, endowment policy is an inefficient way of obtaining life cover. What you get here is a life cover plus generally in an inefficient or suboptimal way of deploying your investment. Of course, now life insurance companies have also hired very professional and accomplished money managers to manage the wealth of the people who are buying those unit linked insurance plan or money back kind of a plan or endowment policies. However, it still remains as the secondary activity of the insurance provider, the factor of combining insurance with investment. My advice is that to keep it separate. I think I am telling the same thing which many of you might have heard. Do not ever get lured into life insurance because of the two absurd reasons which many times people propound. The first one is that for income tax reasons. Second, of course, as I told you, treating it as a pure investment. Remember, life insurance is for protection. It should be treated as an expenses, as if you are deploying a security guard. You are not expecting that security guard will also develop as a servant or develop as a cook, unless like the government employees or some of the other organizations where either on their own or based on a backup policy, the institution itself takes full responsibility of your medical claim or medical illness or your family's medical illness. Then you must buy a medical insurance or what is called non-life insurance or health insurance. What you must consider while taking such health insurance is that what are the coverages, whether it covers hospitalization along with pre-hospitalization and post-hospitalization expenses, whether it covers OPD, whether it covers general healthcare related expenses, whether it covers gynecology and childbirth related expenses, whether cashless facility is available. Today, there are many aggregator websites like Policy Deco, Policy Bazaar, or Insurance Deco who give end-to-end experience of comparison, buying policies, and settlement of claims. Please take advantage of such aggregator platforms. Many young people think that we do not have any disease. Why should we take medical insurance? But it is like building your credit history for obtaining future loans, that you must start paying well, you must know your health record and insurance right into the middle age or old age. Typically, the insurance policy gets approved after many, many checks. However, as renewals happen, generally it is seamless and the waiting period is not there. The insurance premium for continuing and renewing customers is substantially lower than people who are coming when they are scared that something has happened and by now an insurance cover must be taken. Now it is becoming a habit. People are getting used to the cost. Many times CTC also includes company negotiated mediclaim policies. Please take the top-ups if they are available. Please take the special privileges that are available for payment of a small cost. Please take the group benefits that your employer can avail in on your behalf, can negotiate well. Take both of them, life insurance and health insurance, but after understanding all the nuances of it. Thank you very much.